few options for your YouTube intro. Choose the one that best fits your style. Option 1, direct and action-oriented. Hey Forex traders, welcome back to Forex Scope. Today, we're diving deep into EURJPY on the 15-minute and 1-minute charts. If you're looking for actionable insights and potential trading opportunities, you're in the right place. Don't forget to hit that subscribe button so you never miss out on our latest analyses. Option 2, friendly and engaging. What's up, Forex fam? It's your host from Forex Scope, and I'm excited to bring you a fresh analysis of EURJPY today, focusing on those crucial 15-minute and 1-minute timeframes. We'll be dissecting the current trends and looking ahead to what the price might do next. If you're passionate about mastering the Forex market, make sure to subscribe and join our growing community. Option 3, concise and professional. Welcome to Forex Scope. In this video, we're breaking down EURJPY using the 15-minute and 1-minute timeframes. Get ready for a detailed look at its future price direction and potential trading signals. For consistent Forex insights, remember to subscribe to Forex Scope. Option 4, enthusiastic and forward-looking. Hello and welcome back to Forex Scope. Today, we've got a fantastic breakdown of EURJPY coming your way, with a sharp focus on the 15-minute and 1-minute charts. We're here to provide you with clarity on potential moves and signals for your trading strategy. If you want to stay ahead in the Forex game, smash that subscribe button. The support zone is identified around the price level of 176.261 to 176.307. This area shows clear price action behavior with multiple touchbacks, indicating strong buying interest at these lower prices. Specifically, the period between 176.226.0300 and 176.226.1200 exhibits a notable consolidation, with prices testing this lower boundary. The high price within this time frame was 176.408 and the low was 176.307, suggesting that prices struggled to break below this level decisively. The consistent interaction with this price range implies that it acted as a floor, where buyers stepped in to absorb selling pressure, preventing further declines. This accumulation pattern signifies a significant level where the market previously found support, making it a strong candidate for a future support zone. The presence of several candles interacting with this range reinforces its importance as a price action support. The resistance zone is identified around the price level of 176.414 to 176.469. This area demonstrates clear price action characteristics, including strong rejections and limited upward momentum. Observing the data from timestamp 176.224.8600 to 176.225.0400, we can see prices reaching a high of 177.069 and a low of 176.925, but consistently failing to sustain higher levels. The fact that prices struggled to break above the 176.469 mark, and frequently tested the lower bound of this range without significant upside follow-through, points to a strong selling pressure at these higher prices. This indicates that sellers were actively defending this price level, creating an upper boundary for the market. The accumulation of bearish candles or indecision near this range further solidifies its role as a significant resistance. This area represents a price point where supply overcame demand, preventing the price from advancing further and setting up a potential ceiling for future price movements. The touchbacks and consolidations around this resistance level underscore its significance in price action analysis. The resistance zone is identified at the price range between 176.414 and 176.405, observed between the timestamps 176.227.4880 and 176.227.4940. This area represents a significant ceiling where the price struggled to break higher, with the highest price in this interval being 176.391 and the lowest being 176.38. The price action here indicates a strong supply pressure, as evidenced by the multiple attempts to push prices up that were subsequently rejected, forming a clear consolidation or distribution phase. This suggests that sellers are actively defending this price level, creating a barrier that has historically proven difficult for buyers to overcome. The presence of several candles with significant upper wicks within or around this zone further reinforces its role as a resistance. The price has repeatedly failed to sustain a move above this level, indicating a zone where selling interest is dominant and likely to limit upward price movement. The relatively close proximity of these candles and the consistent rejection suggest a well-defined area of overhead supply that traders should be aware of. The support zone is identified at the price range between 176.230 and 176.160, observed between the timestamps 176.226.5040 and 176.226.5580. This area represents a significant floor where the price found buying interest, with the highest price in this interval being 176.313 and the lowest being 176.174. The price action here suggests a considerable amount of buying pressure, as the price repeatedly tested this lower boundary and bounced back. The presence of several candles with prominent lower wicks within this range indicates that buyers were actively stepping in to absorb selling pressure and push the price higher. This zone exhibits characteristics of a sideway accumulation or consolidation, where buyers and sellers were in a battle, but the buying interest ultimately prevented a significant downside breakout. The multiple touchbacks and the formation of lower support levels within this broad zone highlight its importance as a floor for the price. The significant price swings and the formation of numerous candlesticks within this defined range point to a period of indecision but ultimately favored the buyers in preventing further declines. The market sentiment for EURJPY is showing signs of a potential shift after a period of consolidation. The Fibonacci levels suggest a retracement opportunity, with the price currently hovering around the 176.406 mark. Considering the recent price action and the interplay with the 15-minute resistance at 176.414 and the 1-minute resistance at 176.414 to 176.405, we might see a slight pullback to 176.387 as the initial reaction. This move would be supported by the tick volume data, which indicates a moderate level of trading activity without a clear directional bias. However, the underlying trend, influenced by the broader market sentiment and the successful defense of the 176.307 support level on the 15-minute chart, suggests a potential for further upside. If the price can successfully retest and hold above the 176.352 level, we could witness a move towards 176.370, followed by a retest of the previous resistance zone. A decisive break above 176.405, then potentially 176.414, would confirm an upward continuation, targeting higher Fibonacci extensions. Conversely, a failure to hold the support levels could lead to a deeper retracement, but the bullish undertones from the broader analysis suggest that any dips are likely to be met with buying interest, paving the way for potential upward exploration. The Bollinger Bands are currently widening slightly, indicating increasing volatility which could lead to sharper price movements in either direction, but the overall structure points towards a cautious optimism for the bulls.